Welcome back to AlgoBot, where we explore the logic behind automated trading systems for MetaTrader 5. I'm your host, AlgoBot, and today we're taking a close, educational look at a strategy called the Elastic Volume Trend Rider. This expert advisor is built around a fascinating indicator known as the Elastic Volume Weighted Moving Average, and it uses a pullback and reclaim style of trend trading. Over the next few minutes, you'll learn how the indicator adapts to trading volume, how the entry and exit rules work, and how it all comes together on a chart. Let's get started. So what exactly is the Elastic Volume Trend Rider, and what makes it different? At its heart is an indicator called the Elastic Volume Weighted Moving Average, or eVWMA. Most moving averages you've seen use either a fixed window, like a simple moving average, or a fixed smoothing factor, like an exponential moving average. The eVWMA does something more dynamic. Its adaptation speed is driven by volume, specifically by how large the current bar's volume is compared to the total volume, or float, of the recent past. When big participation enters the market, the line reacts quickly. When activity dries up, the line becomes patient and coasts. Think of it as a fair value line that listens to conviction. The strategy uses this line as the backbone of a trend-following, pullback and reclaim approach. Rather than buying breakouts or fading extremes, it waits for an established trend, then looks for price to dip back to the elastic line and reclaim it on renewed volume. This is a classic trend continuation idea, dressed in a volume-aware indicator. Because every calculation is normalized, the slope by the average true range and the volume by its own recent average, the strategy is designed to adapt to whatever symbol and time frame you apply it to in testing. It doesn't assume a fixed pip value or a fixed volume level. That makes it flexible across foreign exchange pairs, indices, metals, and other instruments during backtesting. Who is this style suited for, in an educational sense? It's aimed at those interested in trend-following systems that try to filter out sideways, choppy conditions, and only participate when both price structure and volume line up. It trades on a single primary time frame, takes one position at a time, and defines its risk on every trade with the average true range. As always, this is a framework for study, not a promise of any particular outcome. Let's break down exactly how the Elastic Volume Trend Rider makes its decisions. Everything begins with the Elastic Volume Weighted Moving Average, or eVWMA. Unlike a standard moving average that uses a fixed smoothing speed, this line adapts on every bar. The strategy first sums the tick volume over the last 20 bars, a value called the float. It then divides the current bar's volume by that float to produce a number called alpha. When a heavy volume bar prints, alpha is large and the line snaps quickly toward price. On quiet, thin bars, alpha is tiny and the line simply coasts along. In this way, the eVWMA behaves like a fair value line that follows conviction rather than the clock. Next, the strategy assesses the trend regime. It measures the slope of the eVWMA over the last 10 bars and normalizes that slope by the average true range. This gives a volatility-adjusted read on how strongly the line is rising or falling. If the normalized slope is above the threshold of 0.05, the market is considered to be in an uptrend. If it's below negative 0.05, it's a downtrend. Anything in between is treated as chop, and the strategy stands aside. The strategy also requires a volume surge. The current bar's volume must be at least 1.2 times the average volume across the float window. This ensures the entry aligns with a genuine push of activity, matching the elastic philosophy of the indicator. Now for the entries. For a long, three things must line up in an uptrend. The bar must dip down and tag the eVWMA, meaning its low reaches or crosses the line. It must then close back above the line, and it must have a bullish body, closing above its open. When those conditions and the volume surge all agree, the EA signals a buy on the resumption. For a short, the mirror applies in a downtrend. The bar rallies up to tag the line, then closes back below it with a bearish body, alongside a volume surge, and the EA signals a sell. Risk is handled with the average true range. On a long, the stop is placed below the pullback low by 1 ATR, and the take profit sits 2 ATR above entry. On a short, the stop goes above the pullback high, and the target sits 2 ATR below. That's a reward-to-risk structure of roughly 2 to 1. The EA holds only one position at a time and acts only on fully closed bars. Let's look at the actual MQL5 code running inside the Expert Advisor. At the top, we have the input parameters. FloatPeriod, set to 20, controls the eVWMA's volume window. SlopeThresh, at 10, sets how far back we measure the slope. SlopeThresh, at 0.05, is the regime gate. VolMult, at 1.2, defines the volume surge multiple. Then we have the ATR period of 14, a stop multiple of 1, a target multiple of 2, the lot size, and the magic number that tags this EA's trades. Below the inputs are the two signal blocks. The long block checks three conditions joined together. The normalized slope is greater than or equal to the slope threshold, confirming an uptrend. The bar's low is at or below the elastic line, while its close is back above it, and the close is above the open, giving a bullish body. When all of that is true, the code calls trade.buy. Notice how the stop loss is the lower of the pullback low or entry, minus 1 ATR, and the take profit is entry plus 2 ATR. The short block is the mirror image. The normalized slope is less than or equal to the negative threshold, confirming a downtrend. The bar's high tags the line while the close is back below it, and the close is below the open for a bearish body. That calls trade.sell, with the stop placed above the pullback high plus 1 ATR and the target 2 ATR below entry. Both stop and target are normalized to the symbol's digits before the order is sent. It's a clean, symmetric structure, the same idea applied in both directions. Let's bring the strategy to life on this illustrative chart. The gold line weaving through the candles is the elastic volume-weighted moving average, our fair value baseline. Watch how it hugs the price action, speeding up on strong bars and coasting on quiet ones. On the left, price is stair-stepping higher. The first few candles each close a little above the last, and the elastic line rises beneath them at a steady angle. This rising line is exactly what the strategy's slope gate is looking for. Because the normalized slope has climbed above the threshold, the EA now recognizes an uptrend and begins looking for a pullback entry on the long side. Then we reach the setup candle. Price dips back down, and the candle's low reaches right into the elastic line. This is the tag the strategy waits for. But instead of collapsing through it, buyers step back in. The candle closes back above the line with a bullish body, and critically, it does so on a burst of volume above the recent average. That volume surge is the confirmation the strategy needs. At the buy entry marker, the EA signals a long on the resumption of the trend. Now look at where risk is defined. The stop loss is tucked just below the pullback low, 1 ATR beneath it. So if price had broken down through the line instead of reclaiming it, the loss would be contained. The take profit target sits 2 ATR above the entry. That's the 2-to-1 reward to risk structure in action. Price obliges. The next candles push higher with conviction, the elastic line accelerating upward beneath them. A couple of bars later, price reaches the take profit target and the long trade closes for a gain in this illustration. That completes the long side of the strategy. Now the character of the market changes. Near the highs, momentum fades. Price rolls over and starts making lower closes, and the elastic line bends and begins sloping downward. Once that normalized slope drops below the negative threshold, the strategy flips its bias. It now considers this a downtrend and looks for a short side pullback. Here comes the mirror image setup. Price bounces upward in a relief rally, and one candle's high pushes right up to tag the elastic line from below. But sellers reassert control. The candle closes back below the line with a bearish body, again on a surge of volume above the average. At the sell entry marker, the EA signals a short on the resumption of the downtrend. Risk is defined the same way, just inverted. The stop loss sits just above the pullback high, 1 ATR above it, and the take profit target is placed 2 ATR below the entry. As the last candles roll lower, the elastic line trails downward and price reaches the take profit target, closing the short trade in this example. Notice the symmetry of the whole picture. In both directions, the strategy waited for a clear trend in the elastic line, waited for price to pull back and tag that line, and then required a decisive close and a volume surge before acting. It never chased the market in the choppy middle. It engaged only when volume and slope agreed. That discipline, Filtering for both trend and participation is the core idea behind the Elastic Volume Trend Writer. And that brings us to the end of our educational walkthrough of the Elastic Volume Trend Writer. Today we explored the Elastic Volume Weighted Moving Average and how it adapts its speed to trading volume. We stepped through the trend slope gate and the volume surge requirement. We read the long and short signal blocks in the MQL5 code, and we watched both a buy and a sell play out on the chart. Remember, everything in this video is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. All trading involves risk, and losses do occur. If you found this analysis helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment with the strategy you'd like us to cover next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.